Welcome back to the channel. I'm Crypto Trend Trader, and today we're going to be taking a look at Bitcoin. But before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please trade at your own risk and do your own research. I just want to touch base again, guys, because I just put out that video and we got the exact move that I was talking about. So here is the clip from the last video. Again, I think it's more likely we probably get that move up to 9,000. I mean, it looks pretty bullish. We're holding strong right now. You know, we could see that anytime in the next 6 to 8 hours, really 4 to 8 hours. We could see that move before 4 a.m. So, well, there you have it, guys. That's great. All right, it's 1:37 right now, guys, and I was just talking about that move, and you'll see we did get it before 4 a.m. We got the exact move up to 9,000, depending on what exchange you're looking at, and immediately got a massive sell-off. So, look, now, what I want to talk about is why it's important to be able to recognize these patterns correctly. So what people were saying this was, they were calling this a Wyckoff accumulation pattern. It's not a Wyckoff accumulation pattern. This is a Wyckoff distribution pattern. Okay, it's called redistribution. So what happens is you get a sell-off, you start getting these moves, the Wyckoff moves and everything, you start selling off lower, 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 and then you break up, you break to a new high, you break above, and that's your upthrust after distribution. Distribution has been taking place through this entire range. We get the upthrust after distribution. It's a fake out move above the range, out of the range, and then we immediately get a sell-off back down inside of it. That's the upthrust after distribution. What it is a fake out to create liquidity for the market so that the big dogs can sell their larger positions into the suckers. Okay, it's like a sucker rally. So we just got that. It's the reverse of a spring. We got the upthrust after distribution. We got a massive sell-off. I mean, this is on a 4-hour candle. Let me switch over to the hourly. Basically, we closed the hourly and then we immediately shot up, and then we dumped straight back off. Okay, so now I'm going to go back to the 4-hour here, and that is now a bearish engulfing candle. I mean, it's worse than a bearish engulfing candle because it's basically bearishly engulfing not only that past one, but a bunch of other candles as well. This one's taken up like the last 5 candles. So I mean, we got to wait and see how this closes here. That's on the 4-hour. If we switch back over to the hourly, I mean, look, we just took out that entire range with this one candle. So I mean, that's a massive bearish candle. So basically, it's just a huge rejection candle. That's all that means. So now we sold down back below the 377. So now we're below the 377 again. So it wipes out all the bullishness that we just created through this move here. And now if we switch over to the indicators, now that we see this is a confirmed distribution pattern. So we're basically getting our sell-off. It comes down, finds a low. We get a reaction rally off that low. We come back, we test the low again, and then we get a sign of strength, a push up, and then we slowly start selling back off. We come back down here again, and we get a sign of strength again from the trend, a sign that it's going to bounce back up because we get a lower, a low, a same low, and then a higher low. So now when we sell off this time, it comes down less than it did in the past. So that looks bullish. We come here, we break out over, like we have this trend line here. Depending how you have it drawn, you could have basically this trend line, or you have the larger channel trend line in white right here. But as soon as you break through that, you get this big move up here because we broke out of it, and then we consolidate again, and then we break up to the 200, and then as soon as we hit the 200, it's faking everybody out thinking we broke out again. But really what happened is as soon as we got up here, we hit these massive sell orders, and they just dumped the price straight back down. And now everybody that bought any time prior to this breakout, anybody that bought anywhere in this candle or anywhere above it, is now trapped upside down in a position that they couldn't get out of. So what they did was they used the stop losses to the upside for the people who shorted. So if you had a short in here, you just got stopped out on the move up, and then it dumps in the direction of your short. So now it's shorted, so you have to reshort at a lower price if you want to get back in that position. Or if you took a long anywhere up here, you immediately were in profit, didn't take profits, and now the price dumped back low, and now immediately your position is at a draw, so now you're negative, and the price will not go back above there, typically in a position like this or a situation like this. So what happened is we came back down, we got a reaction rally off these moving averages in the support line. I expect that we're going to consolidate here, but now we're getting the hard sell on the jewel. it was saying basically that we were looking for a top right here. You see where the green is up above and we start getting the sharp point on the knife right there? That's how you know we're looking for a top, and then that's when you often see this come in here, and that's why we take that safety trade. We have our short in through this area. It starts going in profit. Assuming we don't take profit here, we have another trade set up here above the stop loss that normal people would put. They would take the trade in here after we top out and we put a lower high in, and then they would set their stop loss above that wick right there. So if price goes higher, it'll hit their stop loss, and it means they're wrong. But what happens is we put in the safety trade, so we buy up here and then we put our stop loss up above the 200, so we get put into a trade in this range and then immediately sells off and we're in profit. So that's another perfect example of when it works out. And you'll see now we are getting the hard sell on the 4-hour jewel as well. We do have the negative histogram we were talking about before. Even with the fake out turning it green, that's why we have to look for confirmation closes. And there's still 2 hours left on this 4-hour, so maybe it gets bought straight back up to 9,000 and we get continuation, but I doubt it, guys. That looked like a big time upthrust after distribution. It looked like a big time spring, pulling back the slingshot, getting ready to launch the price in the opposite direction. It's a lot easier. You get a lot more velocity on something if you pull the price in one direction and then shoot it in the other direction than if you do just shoot it in that direction from a dead stop, because you use the momentum from the direction you pulled the price in, and then you get the momentum in that direction plus the momentum from all the people that just got tricked and put in the wrong side of the trade. So we'll see how this plays out. I mean, that was a powerful move. A lot can happen here, but as you'll see, the hard sell, or the hard buy rather, had us in this area right here, and the hard sell has us out in this area right here. So if you were literally just trading the jewel and just trading the hard sell signals, I mean, you made an easy 7% profit, at least 5, depending on how you did it. You could have took profit a couple times along the way too. Could have got a better entry. I mean, but as you can see on here, if you took the accumulation zone through here and then you sold through the distribution zone, you already did like 5 to 7%. And then if you rebought it on the retest here again, you did even better than that. So, but that's literally just using the jewel. I like to pair it with the TD MACD because as you can see, and again, I'm going to pop them up on here so you can go look for them. It's the TJD Jewel Thief and the TJD TD MACD. You can go get them on TradingView for free and help yourself, guys. But you'll see while we have on this 4-hour chart here, we're looking at a micro trend. We know we're in a bearish trend. We're moving downwards in a channel. But on the micro trend, we're in a bullish trend, because once we see this histogram tip green a couple times in a row, we're looking for an entry point in here. And then once we see, and this is not financial advice, this is just how I trade it. Once we see the histogram cross over the average line here, we're going to enter again. And then the third time is when it turns blue here, and then that's going to have you like your triple entry basically. Or if you're just using this as a trend indicator, once it turns blue, we're in a bullish trend or we're in an uptrend. And then you can use this however you want. You can sell when it gets to the top right here. You can use a different indicator to sell, like the red distribution or yellow hard sell signal. But once this comes down here, once the histogram comes down and it touches that blue line again, and then it drops down below, we'll see what will happen is it will slowly turn this red slope line red. And once that turns red, it shows we're in a downtrend or a bearish trend. So you're going to be looking for shorts on a short time frame. And that's just if you want to use, like, if you want to do some scalp trading on shorter time frames or whatever. Because if you go to like a daily or a weekly and you're looking at like an actual trend, it doesn't change often. So you'll see like this has had us basically in the bearish trend since the 3rd of July, and then it had flipped once right in here, and then it had us back here in September, and a bull trend. And then, but again, and I've went over this a bunch of times too, when you're in a heavy consolidation like this, you can't trust these indicators as much because they're going to flip back and forth because the slope is very much like levels out. So just a little bit of a move up can change the direction of the slope, or a little bit of a move down. That's when you want to use that in conjunction with something else like the TJD Jewel, because as you can see here, it calls the 2 perfect tops right there. Even when this thing is telling you, yeah, you're in an uptrend right here, you're not, because you're getting a hard sell signal, or you're getting the distribution zone from the jewel, so you're not. And then again here, this thing had you with the blue slope and the upward slope, and then it switched right as the dump's going on. But the jewel here, you could see we had a blue downslope right here this whole time. We knew. And then we saw the knife actually was already poking its head out. You see that red? That knife was poking its head out way before, giving us the clue. Look, even right there, we knew the knife was telling us this about to dump. And then here it goes, yo, this is the real deal, continuation. And then you'll see we got that massive candle down afterwards. And, you know, a lot of people didn't see that coming. That knife will literally catch everything. And that's why I call it that. It's for the people who want to scalp, people who want to call bottoms, etc., etc. Because that knife is, I mean, it's something else. So there you have it, guys. I just want to touch base again. I normally don't just come right back with that "I told you so" video, but you know, I mean, it's nice when this TA stuff works out, especially when it works out real quick like that. I said that move was gonna happen before 4 a.m. and here we are. It's 2 a.m. and it already happened. So you know, I called that move within a couple-hour window. It's funny because I literally was like, I think I'm gonna do a video. Looks like we're about to pop up here, and I threw the video up there, got it posted, and not even an hour later we get that massive move. And then if you've been watching any of my videos at all, guys, you see I always call this right here. I always call these springs. We get that big move up, and then it's about to massively sell off. So the most common time you're going to see that is we go up and we test a strong resistance, we're going to get a sell off. We come down, we test a strong support, we're going to get a massive move up. And you'll see that's exactly what we did. We came on here, we tested this support 3 times. Every time we touched it here, got a massive move, touched it here, got a massive move. We come up, touch a 200, and we're going to get a massive sell-off as soon as we realize it. Because that's where a ton of people, we're in a downtrend, tons of people set their short orders for right here. So as soon as price gets up to there, it fills all these shorts, price dumps back down, and then everybody's trapped in those trades. And we'll see where it goes to from here. But now, as you'll see on the 4-hour, we're all the way maxed out at the top. We're getting the hard sell. So it's going to be a lot easier for us to get continuation to the downside now that we let all these oscillators reset and cool off. Like, here's a 4-hour stochastics, MACD, and RSI. We were able to literally, from this small area right here, we were able to move the oscillators all the way up to the top of the range. So now we have all 3 of them up at the top. And then we literally just get that sell-off, and now we can downtrend them and get actual price movement to the downside, and we can go ahead and realize all these targets that we had set out here. So if you remember from our other video, and if you didn't watch it yet, you can go back and watch it now, but these were our different fib level targets, depending on which fib level you were looking at, because we have a bunch of them in place for like our different levels, but you can come and see the chart matrix and how this is broken down. But as you'll see here, what we're expecting to happen is one of these 3 fib levels to get realized, and it is sort of a broad range. We did already hit our first one and accumulate through here, but now as we got to the 0.5, what we're expecting really to happen is sell off down to the 0.6, 618, or the 236 here in orange. So, and then we can get a powerful move here, and then hopefully we can get the move up. So, but that is what we're expecting. We could consolidate here after that big move and then show some strength and move back up to the upside. But again, I feel like that was just a way for us to reset our oscillators. You'll see now, like, daily stochastics are all the way at the top. We got a nice positive histogram on the MACD. So now we can sell off, and you know, we're not already exhausted all the way down at the bottom. And same with the RSI. We were able to get the RSI all the way back up to like the 45 range, which is like neutral territory. So now we can get a nice sell-off and continuation to the downside. Like, we were just getting exhausted on all the oscillators. So whenever we try to sell off, we were just finding too much support because people are going to buy when they're in those low ranges. So after we get the big push up right here, but we do very little damage to price action. So you'll see, and this is my point when I say little damage to price action. Look at the stochastic right here. Okay, price is right here on the stochastic, and it's all the way up at the 80 range, okay? So price is at like 10,700, and it's at the 80 range. So then we get all the way back up to the 80 range, and now look where price is at now. Price is at like 8,500. So we did like over 2,000 and some change damage to price action, and the oscillator is right back where it's at. So now if we sell off again, we could do another 2,000 damage. I'm not saying that's going to happen, but we could potentially do like down to the 7,000 range on that same move. And you'll see we did the same thing right here, okay? We were at 11.9, so like almost 12,000, and then we get the sell off down here, and the second sell off, we get from 12,000 like on the first one down to like 9,800, 10,000, let's say, so 20%, or from 12,000 down to like 9,500.